Julian, thank you for taking the time. The resources sector in the African continent always goes through themes. What themes are you seeing as the resources sector solutions at RMB?
So last year, I made a bold call out there and talked about recession being the buzzword for 2023, which was a complete bomb. The most anticipated recession ever didn't happen. So hopefully we're going to be a little bit more accurate with predictions for 2024, but let's see what happens. I think this year is all about geopolitics and elections. So we've got half the world's population going to elections this year. We've already seen some interesting results. We had the DRC elections towards the tail end of last year, Taiwan coming in early January, where they continued with the DPP, which is pro-independence. So I think we're setting ourselves up for a lot more of an interesting year from a geopolitics perspective. And definitely the risk in the geopolitical sphere has not been priced in. So the Middle East conflict, which we see escalating day by day, isn't reflecting in the oil market. And as we know, oil is the kind of leading indicator for the commodity price complex. And where that goes, the rest will follow. So there's a lot that we're looking out for on that front. I think India is going to be a big one. We don't expect any upsets there. But as one of the major players in the global economy, one of the leaders of global growth, India is very important and from a political perspective, and Modi continuing his policies and driving Indian growth and manufacturing is going to be important, particularly for commodities. And then you've got the US towards the tail end of this year, and particularly for South Africa, we've got South African elections mid-year. And I think those, it's anyone's guess, really. We've seen so many political movements over South Africa's politics over the past 5 years, and this is going to be a pivotal moment for us. It could go either way. Our house view is that you've got a rand exchange rate that's appreciating, but I think if you get adverse results or coalitions that the market doesn't like, that could be big moves up or down. And I think that South Africa has got a lot of interesting headwinds to face, but potential tailwinds now. We've made some real traction in Operation Diale, and part of me would like to see that continue, irrespective of whatever regime comes in, because these are necessary reforms for the South African economy that we're hoping to play a part in. And we need to get things like Transnet's freight turnaround right. And we want to see more of a kind of liberalization of the market so we can become more competitive on a global scene.
And with what you said about the geopolitics, how do you see that translating into prices, seeing that Africa and South Africa in particular as a commodity exporter?
So one of the things that I think was surprising about last year was how China re-emerged into the global economy post-COVID and then almost collapsed. Right? So the Chinese economy is disappointed. The levels of demand haven't been as great as we potentially would have hoped, and that's led the commodity complex down. So last year we talked about a roller coaster not having stopped. We're still on that. And I think there's lots of potential for volatility. But overall, I think there's more pressure downwards on prices than upwards. And we've seen some pretty big collapses where we didn't expect them. So I think most people have been caught off guard by the lithium price collapse. And there are massive inventories of batteries and the source materials at the moment that need to work their way out of the system before we can see that recover. So there's something like 4 months of demand that is in battery form in China that needs to get out into the world, and EV sales seem to be flagging somewhat. So I think that we're in for tougher times rather than good times, but with a few standouts. So I think copper is going to remain strong. I think the politics in Panama are playing into that and taking supply out of the market at a time where we're starting to get into a deficit situation. And it takes a very long time and a lot of capital to build a new copper mine. So that we imagine is going to be a persisting trend. Gold, we think, will stay pretty firm, but I think the rest of the commodity complex is going to come under pressure. And then watch energy. Where oil goes, I think will set a lot of the tone for coal. Uranium is an interesting play. So this year is going to be more of a mixed bag, and I think more divergence than we've seen in the past.
And with that said, do you see any opportunities for investment into Africa?
Yeah, so I think that Africa's seeing a bit of a comeback from certain of the old players. So we're definitely seeing more Chinese interest in African resources again. So after a brief hiatus and an exit and a pullback, they're now coming in, particularly around the battery materials, the critical minerals, and significant prices being paid. I think most people would know about the Tumelo acquisition that was announced towards the tail end of last year. Hefty price tag and very good outcome for the private equity players behind that. And there's probably going to be more of this kind of activity going forward. So I think any asset that comes up for sale in that space will attract good interest. India has a kind of resurging interest. And then there's some new kids on the block. So the Middle East is starting to deploy their capital into Africa and African resources, where previously I think they've kind of stayed back and watched the scene, typically fairly risk-averse investors. They're now putting significant capital at risk in African countries. We've seen Abu Dhabi coming into Zambia, and I think there's going to be more of that going forward. So there's a lot of capital chasing assets in Africa, and not necessarily the same number of projects. So we talked previously about the lack of exploration activity and how we had a very short boom in commodity prices and a return to exploration, but that's come off pretty quickly as well. So as quickly as the commodity prices rose and then fell, we've seen exploration rise and fall. And I think we still haven't cleared out a lot of the historical backlog and underspend. And that's always going to lead to tightness in the market, although for the time being, it seems that we've got excess supply, inventories being rebuilt, and that downward pressure, but that could very easily come out of the market quickly if we have demand returning.
And given the need for exploration on the African continent and the infrastructure and energy challenges that you mentioned earlier, does RMB have a view on what is needed in terms of unlocking the infrastructure or the energy challenges that the African continent has?
So look, we certainly want to play a role in that. And we've got dedicated teams focused on the infrastructure side of things. There's a lot of money going into certainly power, and we've seen that wave in South Africa. But as soon as the regulation allows, there's almost a wall of capital waiting to break over those investments. And with South Africa going for the National Transmission Company, we expect that there's going to be a lot of interest in funding that and in funding the build out. And you can just extrapolate that across the rest of the continent. But I think we'll leave that for some of our colleagues to address in some more videos later.